8:39, June 15th, 2021. I'm here with you. It's beautiful. But what did we just find out, people? Oh my gosh. It's disgusting. It's sad. It's stagflation. Okay? We just got 3 separate points of just absolutely terrible. I mean, I don't know how to describe it. Ugly, cratering economic news that, normally in a real market you would see, I don't know, stocks put on some losses if this was happening. But no, not in this environment. I mean, we have right now gold slightly higher, silver under some pressure, but I don't expect that to really last. And then the index is pretty much flat across the board. I mean, they have put on a little bit of losses, but they're still higher across the board, but flat. And crude oil putting on a nice gain at 1%. And the dollar slightly higher, 10-year pretty much stable. Although I think slightly higher after this data, yeah. So what did we find out? Well, we got retail sales, we got producer price index, and we got the Empire State Index, which is an index of economic conditions put out by, I believe, the New York Federal Reserve. So we'll start with the Empire. They were expecting 22.9. A higher number is better in this one. It means there's more growth happening.
When you look at the inflation,
we got
these are chain
17.4. I mean, think about that. We missed the mark by pretty much 25%.
Index of inflation,
and that is just absolutely terrible.
Interest rates still at zero. That means
I don't even really know what else to say about that. But again, you would think that markets might go down. No. Retail sales. This was, I don't know what the biggest number here was, but this was probably the biggest number. They expected,
and it's going to be significant. And
without autos included, because they were saying, oh, well, there's temporary pressures with autos, blah, 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 so they stripped that out. What are the other things doing? They expected it to go up by 0.5%.
Where? I mean, inflation.
We went down by 0.7%. So we reversed it and went down more than they thought it would be up by. Okay, so we lost retail sales, but yet in the same month, we saw massive increases in the producer price index, which is an index of inflation. And this is why we have stagflation right here, right now. Okay, you don't need to look any further. It's here right now, and they will try to. It will be concealed to a certain extent, but it's right in your face right now. It's a very sad situation because stagflation is. Well, it kills people. It kills the economy, it kills people, and unless you're in these anti-debt units, crypto, gold, silver, you're going to be left in the dust. And of course, you can trade this market too. But so the PPI, the monthly core was up 0.7% versus 0.5% expected. So not a single economist or a single consensus estimate was correct here. I don't even know how they do these, but in 1 month we had a 0.7 increase in producer prices. Now let's just have a little fun. 0.7 times 12.
Look at retail sales, right?
8.4% if you annualize that out. I mean, they're talking about 2% inflation in their target in these last decade or so, the Federal Reserve. If you annualize that, we're at 8%. And not only that, but if you go just regular year over year, in the last year, how much has inflation reared its head in the producer side? It's up 6.6%, and they were expecting 6.2%. So, unfortunately, all that's fine and dandy. But at the end of the day, this is about making money. This is about taking advantage of this market. And so, what does this mean for the market? Specifically, what does this mean for the Federal Reserve meeting tomorrow? Well, I told you yesterday that the Federal Reserve wanted to be able to say that the economy isn't yet where they want it to be. And while inflation data like this maybe scares them a little bit, when you see these indexes like the Empire State Index performing so poorly, so far below expectations.
And what will the market's reaction?
I believe that the Federal Reserve is loving seeing this economic data come out because it's going to give them an excuse to say, oh, we're going to continue asset purchases, we're going to not stop, and there's inflation is transitory, you know, but we're not going to stop, right? If this, let's say, you know, the Empire State Index, they were expecting 22.9, it came out at 30, you know, and then retail sales were great, and inflation was still really hot, you know, then there would be times like, oh, the economy's doing so well, but we have inflation, so you really have to cut it down right now. But when you can say, oh, the economy's not doing that well, even though we have inflation, we're going to keep these policies in place, keep buying 120 billion a month, okay? And that is what's going to happen, and that is why the stock market is just going higher. I mean, does it need to pull back? Of course it needs to pull back. But stock market going higher, gold and silver going higher, oil going higher, it's already going higher, and crypto's going higher. It's an inflationary environment, and this is confirmation that it is not going to stop. This is confirmation of stagflation, which we all knew was coming for a long time now, a return of it in proportions much greater than what we saw in the 80s. In the 70s. So that's about it. Let's see how this plays out. We got to keep our eye on the dollar and see if the market gets afraid at all that this hot inflation data is going to affect it on the Federal Reserve side of things. But you know, oftentimes you'll see a little bit of pressure on the assets that go up after the confirmation of the Federal Reserve announcement. So it wouldn't be a surprise for me today to see pressure on stocks, pressure on metals, or even just pressure on stocks. Maybe metals rally, you know, or vice versa. But you know, anything can happen. I always cover my bases, but in terms of what I expect, you know, I expect into the end of the week, into tomorrow, for metals to gain. That is my guess. We'll see if it pans out. And probably the dollar to put on some losses for the rest of the week. It's still not in the danger zone of 91 point whatever. We're sitting in this middle ground. And so that's that. I mean, and other than that, crypto's doing well. Bitcoin, I believe, still over 40,000. Beautiful, perfect. Let's keep that rolling. And I will talk to you guys at
if you price roll of windows today, the new cars are a lot cheaper. So